What in the world is home bias? And how can you not become a victim of home bias? That's today's show. Let's dive in. Hey everyone, I'm Clayton Morris. Welcome to the channel. This is the show where we focus on buy and hold real estate for the purposes of creating passive income, legacy wealth for you and your family. And the vehicle that we use, the car that we hop in on that road to financial freedom, is real estate investing. Now, real estate investing can be any form of real estate investing that you're going to hold on to and create net assets and let them cash flow for the rest of your life. So that could be mobile home parks. It could be residential real estate, my favorite. It could be commercial real estate. It could be owning billboards and land. It could be anything. But today we're going to focus on real estate in general and what's called home bias. And something interesting that's unfolding in the stock market right now, and that is in economics, you need three things, right? You need three things in economics in order to do anything at all. You need land, right? You need land in order to maybe build a building or just to become a sheep herder. What else do you need land for? I guess a blacksmith shop. I'm trying to think of my old SimCity games or Civilization games when you would need land and you'd have the little blacksmith working there and making things. So you need land, right? You need that. You need labor. You need someone to actually do the work on the land. And then, of course, you need money. You need capital. That's what the three things, of course, that you need in economics. It's the baseline. That's all you need. But sometimes there is a fourth factor of production. Entrepreneurship is included in this piece, depending on which economist you talk to. So the entrepreneurship piece of that as well can be added into the mix. Since the 1970s, that's become a new piece of this puzzle. So land doesn't just mean real estate. It includes everything from the land. It could be the natural resources. It could be the forests. It could be the water. It could be a whole host of other things. But what's interesting right now in these elements, we're going to focus on just the land for the purposes of this episode. If you look at people's stock portfolio, your portfolio probably does not have enough land in your portfolio. What do I mean? If you've got a 401k, if you have an IRA, if you're invested in a military pension or a military retirement account, any of those things, you are probably way underrepresented when it comes to investing in real estate. And that's trouble, especially given the volatility in the market that we're looking at and the concerns that major economists and major investors have right now about the stock market. In fact, just check out my discussion and episode where I talk and we talk about Jim Rogers and talking about the coming volatility in the stock market and the worst crash coming. Now, that's not me saying that. That's Jim Rogers, that's Harry Dent, that's other big-time investors who've been doing this a long time who are saying that there's trouble on the horizon. But I want to throw up a chart here for you, and I want to show this to you. And if you're listening to this is the MCI All Country World Index right now. Now, what does this do? Well, this is one of the largest aggregates of global equity market benchmarks available. So what that does is it captures large and mid-cap companies across 23 developed markets and 24 emerging markets. And guess what? It includes nearly 2,500 stocks. So this chart is a representation of these portfolios, of all of these sectors, and where people are invested, where companies are invested, where stock portfolios are invested. And guess what? It is way too underrepresented. I'm going to go through some of the numbers here so we can paint a picture for you. Look what's in these portfolios. Financials makes up about 17% of people's portfolios. Healthcare, about 11%. Materials, about 5%. Industrials, about 10%. Information technology, wow. Information technology at 17%. Consumer discretionary spending, energy is about 6%. Consumer staples, about 9%. Telecommunication services, 3%. But look at this. Look at this. This little pink sliver right here on this chart is at 3.2%. Guess what is all the way down at the bottom of this list? It's real estate. Real estate. And it's amazing. It's the very smallest slice of this pie. It's just really, really ridiculously low. And it's not just this chart also. It's the S&P 500 as well. It is at just 2.9%. So all of those companies that have their riches in the S&P 500, very few of them have brick and mortar real estate as part of their substrata. And that is really troubling. And now when it comes to the personal investor, you may say to yourself, hey, I own my own home. But what experts are saying is that that is simply not enough. When it comes to personal wealth allocation, so a lot of people think, I'm great, I'm invested in my 401k, I've got my stocks through work, I have these treasury bonds, I have these other things that I've invested in. Most people think that, because the physical real estate that I own, the house that I live in, right? We've been told that this is the American dream, to own the house you live in, and that's how you build true wealth. Not at all. Not just the roof over your own head. And they think, I'm covered, real estate's fine, so I won't bother putting anything of real estate into my stock portfolio. Now, it could even be you're investing in REITs, real estate investment trusts, which I'm not a big fan of. I think you should go directly towards owning actual physical real estate yourself, not being sort of 3 times removed from the process. And by the way, I'm going to do a whole show on REITs and where I feel REITs versus owning physical real estate yourself. So owning stocks of real estate or owning actual real estate. I'm a much bigger fan of owning actual real estate. You get higher returns, more value, and you get all of the benefits of the tax benefits of owning those properties separately, individually, than you do in the real estate investment trusts. And you can do a degree, obviously you get the tax benefits, but not to the degree that you do when you own them outright. So what this means is if you're limiting your real estate investments to just the home you live in, is like limiting stocks to just the companies that might be in your own backyard. And I'm a big fan of investing in areas that are not in your own backyard, because guess what? You're going to find some of the highest and best values of properties outside of your backyard, right? If you live in California, you're going to have an incredibly low return on investment. If you go and buy a $500,000 property in California and it rents for $2,000 a month, that's a terrible ROI, right? That is a terrible return on investment. Wouldn't you rather go to areas where you can invest in real estate, where you can buy a $45,000, $50,000 home, a $60,000 home, and having a cash flow for $700, $800, $900 a month? That is a return on investment. So if you're thinking that the best way to invest is only in your backyard, you're really limiting yourself. And that is what is called home bias. It's the epitome of home bias. I'm going to give you the actual definition of it, which is it's the tendency for investors to gravitate towards their domestic market rather than to diversify globally. And that is literally the exact definition of it, home bias. So real estate stocks right now, real estate stocks and other listed real estate securities offer you a couple of additional advantages from investment perspectives instead of just the roof over your head, right? In the real estate world, you can often buy a huge basket of great properties in areas across the country that aren't tied to your local economy. So think about that for a second. Even if you did invest in a REIT, an REIT, outside of your home market, you're diversifying into brick and mortar real estate. And think about this for a second. All of these companies that have manufacturing, they need to open up a new manufacturing plant. They need land. They need another space. So if you're investing in commercial real estate, companies need land, they need brick and mortar in order to thrive. So owning physical real estate as an investment has a lot going for it. Being a landlord can be a hassle, but that's when you can turn to things like turnkey real estate or putting your faith in property management teams like we do and letting them run the whole gamut for you, the whole shooting match for you. But again, don't fall victim to this idea of separating yourself from owning real estate because of the house you live in. So the next time you're looking at your stock portfolio and you're taking a look to see what kind of real estate exposure you have, you want to make sure that even if let me just say it this way, if you're going to go out and buy real estate separately from your 401k, from your IRA and your stock portfolio, great. That's what I would encourage you to do. But, even in your 401k, if you have no plans to cash out your 401k, if you have no plans to move over your IRA to a self-directed IRA, even if you plan on keeping those stock investments, look at your portfolio. Talk to your stock advisor, talk to your financial advisor, and tell them, I want to know how much I'm invested in real estate in these stocks. Is there any way, sir, that we can move more of our portfolio into real estate? How can we do it? what will the returns look like? What types of options are available to you in order to do that? So if you have if you have an IRA and you've moved it over to a self-directed IRA, which of course we've done whole shows on that exact topic on how to do that, then you can actually buy real estate. You can buy investment properties, rental properties inside of the self-directed IRA, right? Like a stock. Therefore, you're not investing in Coca-Cola. You're investing in brick and mortar, high return real estate that's increasing your net assets and your net worth and producing monthly cash flow at a level that you're not going to get in the stock market. So there you go. That is the epitome of home bias, the idea for investors to gravitate towards their domestic market, the home they live in, and forgetting that a whole host of your portfolio is missing out on incredible returns. If you've been paying attention to the show, you'll know that Warren Buffett, the great investor, the head of Berkshire Hathaway, just invested and moved a huge portion of his portfolio up to 10% real estate. He just bought 1,750 properties inside of his portfolio. He owns a lot of real estate and he's moving in that direction. So again, pay attention to what the experts are doing and try to configure your portfolio accordingly. I would love to hear your feedback. And in fact, I would love for you to analyze your own 401k, your own retirement plans, and find out how much you're invested in real estate and post these in the comment threads below. If you're listening to this as a video, great. Please post your comments there on our YouTube channel. Also, I'd love for you to email us and let us know, or post it up on our Facebook page and let us know how much you're invested in real estate in your stock portfolios. And do you have a little home bias going on? Let me know. Thanks everyone so much for subscribing and downloading and all of your kind feedback. Thank you so much for that. Really appreciate it. We publish this show multiple times a week. Thank you for subscribing. And please share this with a loved one who you think could benefit and start to earn some passive income in their life. Now go out there, take action, and become a real estate investor. We'll see you next time, everyone.